Okay, so is building a $5 billion factory the ultimate power move? Or is it just an expensive way to maybe distract from some current challenges? For Rivian, well, it might actually be both. Today, we're embarking on a deep dive into a stock that feels like a perfect storm of long-term ambition and some very real short-term anxiety. Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Using our research captured on September 17, 2025 at 8:04 a.m. ET, we're unpacking Rivian Automotive, that's ticker RIVN, our mission. Let's try to cut through the noise and figure out what's truly driving this stock right now. Okay, let's unpack this, maybe starting with the big picture, the macro environment.
Yeah, absolutely. Right off the bat, we're seeing some market jitters pretty much across the board. Pre-market futures, they're pointing to a cautious, maybe slightly negative start, especially hitting growth in tech sectors. And we're even seeing projections for U.S. GDP growth this quarter kind of slowing down. But look, the real elephant in the room today, no question, is the Fed. The Federal Reserve's interest rate decision is coming out later today.
Right. That's huge.
It really is. That single event could genuinely set the market tone for weeks, which makes today a particularly tricky day to be placing any big bets,
Okay, so the whole market's kind of holding its breath. And meanwhile, Rivian is making this massive long-term wager. They just broke ground on that huge $5 billion Georgia plant. That's where the R2 and R3 models, the more affordable ones, are supposed to be built. Feels like a really powerful, forward-looking statement.
It definitely is ambitious.
But that shiny future seems to be clashing pretty intensely, actually, with a very harsh present. Now, there was that recent software recall, but I gather that was mostly fixed over the air. That's not the core issue here, is it?
No, not at all. That was relatively minor in the grand scheme. What's truly fascinating here, and frankly the critical fundamental issue, is Rivian's valuation.
Ah, the valuation. Okay.
Our discounted cash flow analysis, the method that estimates value based on projected future earnings.
Yep.
It reveals a, staggering negative $31.93 per share fair value.
Wait, negative? Did you say negative $31?
Yes, you heard that right. Negative. Compare that to its current price floating around, $14?
Wow. That's quite a disconnect.
It's a massive disconnect. It basically suggests that even when you factor in future growth, our models indicate Rivian's current fundamentals just don't support a positive valuation. It really highlights the immense speculation currently priced into the stock.
Okay, that negative fair value is genuinely startling. So if the fundamentals look that grim on paper, what is keeping Rivian's price up near $14? What are investors actually betting on?
And that's precisely the tension you see on Wall Street, a commanding 61% of analysts. They have a hold rating.
Hold? Okay.
And buy ratings have actually decreased in the last 3 months. It signals that, the pros are demanding results now, concrete results, not just promises about the future.
Right, show me the money.
Exactly. But beyond just the raw valuation, the human element, the sentiment story, that's where it gets really interesting. It's like a tale of two very different traders really battling it out over Rivian.
Okay, so break down this battle for us. Who's on the bearish side?
Well, on the bearish side, you've got a hefty 14.74% of the available shares sold short.
14%, that's significant.
It is. That's a big chunk betting on the price falling. And get this, it would take those traders over 3.5 days just to cover their positions.
Wow, okay.
So that creates a very, very tense setup, especially if the price were to suddenly move against them.
Okay, that's the bears. What about the bulls? The other side of that fight?
Well, in stark contrast, you look at the options market and it's flashing green, really bullish. The put to call ratio is super low, 0.32.
0.32. So way more calls than puts.
Exactly. Options traders are buying significantly more call options. Those are the bets the stock will go up, then put options, the bets on a fall. It signals really strong bullish sentiment there.
Interesting.
And the hot spot seems to be the $15 call option, suggests many think the stock's heading there pretty soon. Meanwhile, the $12.50 put option, that looks like the defensive line the bears are trying to hold.
$15 calls, $12.50 puts.
Yeah.
Okay. Given this intense clash, fundamentals versus sentiment.
Right.
What are the charts saying? The technicals. I imagine the technical story probably echoes this conflict, right?
It absolutely does. It mirrors it perfectly. If you look at the trend,
Yeah.
the long-term picture for Rivian, still technically bearish, But short-term, the price has shown surprising strength. It's managed to stay above some key trend lines.
So underlying weakness, but immediate resilience.
Precisely. You've got this battle playing out right there on the chart.
Okay, and what about momentum right now? Is this recent upward move gaining steam?
Yeah, momentum gauges, the ones measuring the stock's rate of change, they're pointing firmly upwards. It suggests the recent move higher has real energy behind it, maybe even accelerating.
And volume, are buyers stepping in?
On volume, the bulls also have a strong case. Indicators show a pretty significant influx of buying pressure, and the price has consistently held above a key volume-weighted average price, meaning buyers have generally been in control during recent trading.
But it hasn't been a smooth ride up, has it? I feel like there's been a lot of volatility.
Oh, absolutely. Volatility is high. You're seeing big daily swings. But interestingly, despite all that choppiness, the stock is actually consolidating within a pretty defined range. It's like a coiled spring, you know? High energy, but moving sideways for the moment, just waiting for a catalyst, maybe the Fed decision, to unleash it one way or the other.
A coiled spring. I like that. Okay, so after digging through all of this, our strategic outlook is actually a neutral stance on Rivian.
Yeah.
For the immediate future, at least. Why neutral when there's clearly so much tension and these opposing forces?
Well, if you try to connect all these dots, right, the primary risks are just undeniable. You have that deeply negative fair value we talked about. That's a big one.
Huge.
You have the long-term bearish technical trend, and then you layer on this uncertain macro environment because of the Fed later today. So we're neutral because it really is a battle. It's strong long-term growth vision versus, frankly, brutal current valuation. It's bullish options players versus a significant number of short sellers. It's short-term momentum versus those longer-term bearish signals. And all of this is happening under the shadow of the Fed. It just feels like a standoff with no clear winner yet.
Okay, so for you listening, for the next several trading sessions, the battleground seems pretty clearly defined. Bulls really need to conquer that $15 level. If they do, that could potentially trigger a short squeeze, where the shorts get forced to buy back shares, pushing the price even higher.
Exactly. That's the bull.
And the bears, they're desperately trying to defend that $12.50 mark.
That's their line in the sand. And our invalidation level, really, a decisive close below $12.50, that would strongly signal the bears have won this particular round, at least for the short term.
So the big question remains, is Rivian actually building the future of EVs? Or are investors just betting heavily on a compelling narrative, making it the ultimate battleground for Wall Street's bulls and bears? It kind of seems like it's doing both right now. This tension, it's not just about a stock price. It's a really stark reminder of that disconnect between an ambitious long-term vision and some pretty brutal present-day fundamentals. So grab your popcorn, because this tug-of-war, it feels far from over. That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.